I'm kind of starting to believe that the Fed is doing controlled demolition. There's a large part of me that wonders, are they intelligent enough over there? Is Powell intelligent enough to actually be doing controlled demolition, to be thinking in a chess type approach? Are they raising rates with the intention to destroy the market so that they can come in like they're the superheroes to fix the market once again? That's what I wonder. Maybe us on the channel here, if you're a subscriber on the channel, we've been talking about this a lot. Maybe we see a little bit ahead and we're just overthinking it. But logic tells me otherwise. Logic tells me that we have never seen, and it's now finally accurately showing on the chart here, it's finally showing us the recent rate hike, which is why I started the video on this. Now, on the prior video, it showed it at 2.33. Now it's showing that recent 75-point basis rate hikes, excuse me, over 3%. So 3.08% is where the federal funds rate is currently at now. What is so interesting is this is the first time that they've ever raised rates in a recession. Let us not forget that there should be a gray period here. They're saying that we're not in a recession, but we are in a recession. If we go by the definition that we've always used for a recession, we're in a recession right now, which means we're in one of these gray periods right here. Now, when you look back, this is the federal funds rate chart back in the 2000 era before the 2009 collapse, which is this gray period right here. If they were being honest, we'd show a little gray period right here. But you never see them doing this in a gray period. You never see them raising the rates when we're in a gray recession period. It never happens. What they do is they drop the rates in a recession to start printing money and giving away a bunch of free money. And then that stimulates the economy under a Keynesian type model, which is what they use. So they use that tool in their tool chest to fight inflation and to fight a recession. That's what they do. They drop, not to fight inflation, but to fight a recession, rather. It creates inflation. When you print and you print all of this money, it creates inflation. And that's what's so interesting is because what happened recently over at the Bank of England is they've pivoted now. So they're starting up their money printers over there in England. Interesting. So that's why the dollar is showing all this strength right now, is other countries are actually acting worse than even we are. But what that tells me is it's just a matter of time before Powell and the Fed over there pivot themselves. They will raise and raise and raise until they cause chaos. And then when chaos ensues, that's when they will turn around and say, okay, let's start the money printer back up. And interestingly enough, if we show how much they've already printed, this is their balance sheet. Let us not forget, they still have a ridiculous balance sheet over at the Fed right now. They're sitting at around $9 trillion in assets at the Fed right now from all of their excessive money printing and all the buying that they had been doing at the beginning of all of this. And this, let's go back to the 2008 period. This is how much they had in their balance sheet back in the last financial crisis. They had like 2 trillion. This time around, they have almost 9 trillion on their balance sheet. So they're raising and raising these rates, which is essentially attacking the entire market. The market is collapsing now because of it. And I think it's just begun. And I think it's what they're planning. That's my personal opinion on it. I mean, I'm not a financial advisor. I'm not anybody to be taking advice from per se. I just want to say my opinions on this channel. So if you want to hit the like button, if you want to hit the dislike button, totally up to you, but please choose one of them for the algorithm at least. If you don't like it, just don't like it. But if you like it, hit the like, because it's going to get this video out to more people. And I'm sure this is not a video that they're going to be like, the algorithm's like, oh yeah, great. Let's definitely let the people know what the Fed, let's definitely get this out there in the world. Let the people know what the Fed is really up to right now. If I was involved in the stock market right now, which I own no stock. Zero stocks, no stocks at all, period. I'm all in on my business. I'm all in building my American dream, my business, which is what I think other people should be doing too. I think people shouldn't be betting on stocks that are wildly overvalued while the Fed continues to raise rates in a very, very bubble-like market. I wouldn't want to be in any stocks right now, especially if I was. It's funny because they say invest in stocks when you're young. I think you should be investing in your own business when you're young. I think you should be failing a lot when you're young, figuring out ways to get cash flow together when you're young. The only people that are going to survive a real estate bubble right now are the people making cash flow off their properties that consider their properties a business. The people that are just sitting in real estate as, their investment, I'd be very nervous to be sitting in real estate right now. Look at what's going on in the real estate market. Because they continue to raise rates, look how sharp the 30-year mortgages have jumped. 30-year mortgage rate is now nearly at 7%. 6.7% right now as of September 29th. I would argue it's probably going to be over 7% within the next month. And look at how sharp it is too. The biggest thing is just how sharp things are changing right now. And when you see this sharp of a movement, there has to be some sort of backlash here. There has to be. And that's what's the scariest part about it, because this time around, it's not just a housing bubble. It's the currency itself that's in a bubble. And recently, we're starting to see the dollar starting to peak out a little bit. If you go back to the DXY here, the dollar actually just tapped up to 115 on the DXY, and then it fell down to 112. So a good little drop from the highs of September 27th down to today. It ended at 112 and 17 cents today. So little pull off the top there, but still, if you look at the 1-year chart, it hasn't even taken really a breath when you zoom out the chart. This is from a year ago, all the way from December of 2021, it looks like. So we can pull this chart back, though, and we can go put it up on 5 years and then even pull it back. I mean, it's still at this. It's just ridiculous how much strength is showing in the dollar right now, when the truth of the matter is, why is the dollar showing strength? Excuse me. Right when I say that, I almost throw up a little bit. Just kidding. But it's funny because you look at how strong the dollar's showing right now, and really there's nothing to back that besides them saying, oh, we're the cleanest shirt in the dirty hamper. We're all back to nothing, but we're the best back to nothing currency. Of all those other currencies that are thin air, we're the best thin air of the thin airs. There's no thin air better than our thin air. Would you like a bridge? I could sell you a bridge if you'd like a bridge. But the thing is, it's funny just looking at it. But you pull this chart all the way back. The last time it was this high was back in 2002. So it's at a 20-year high right now in the DXY. Again, we're seeing a little bit of a pull off the top there, but still, for this entire period, it's just been like not taking any breath, not pulling back at all. And why is this? Well, it's because the things that they're doing right now at the Fed, specifically when we talk about the last 6 months, the reason we've seen it jump so strong in the last 6 months, last year, is because when they tighten policies, it makes other people look at our currency and go, oh, well, at least they're raising rates over there. They're not printing it much more money anymore. Although this current administration, all they do is create inflation. All they do is print and spend our money. That's all they do. Their Inflation Reduction Act is $400+ billion to make windmills. That's what they're doing here. Like, people are going into a cold winter in England right now where they're going to need Russian oil, and they'll sit there and act all pompous like they're helping a tree or something while they starve and freeze to death. That's how crazy the world we're living in is right now. God forbid you go and you drill for oil. God forbid you do that. But, oh, we'll go take a Russian's oil. Oh, but if Russia makes it, everything's fine. We'll take their oil. No problem if we do that. They'll keep us warm. But no, not us. Not us. We won't drill for it because we're too virtuous. We have too much virtue over here. We're virtuous. We hug trees around here. We don't drill oil on our land. We'll take your oil and we'll beg for your oil, but otherwise we'll freeze to death. That's the type of world we're living in now. And interestingly enough, England, who is going to be with all of Europe really over there, is going to be in a very tough environment right now going into the winter. And what are they doing? They're already pivoting. They're already starting their money printers back up. And that's just a matter of time before Powell does the same thing in the United States. Just a matter of time. What they'll do is they're going to continue to raise rates, and we're going to see an artificial strength in the dollar. And then in a matter of time, things are going to collapse. That's what I think is going to happen here. And when we go back, I mean, it's a very clear trend. Every single time they've raised rates, it causes a recession. They raised rates from 2004 to 06, and they brought it from, 1%? And look at, it was only down at 1% for like, what's this, a year? About a year. They kept, this is when they were giving away money for super cheap, is back in 2004. They start raising it, and then boom, the housing bubble happens. And the entire 2008, 2009 financial crisis is right here. So this is what happens last time they raised rates. And keep in mind, they didn't raise rates in the middle of a recession. That's what they're doing right now. But also, when you pull back this chart, look at how gradual the jump is here. Just a gradual climb. But when you go to this part, it's just sharp hikes, sharply jumping it up. And it's not anywhere near the kind of gradual nature that it used to be. So they're sharply jumping up rates in the middle of a recession. What could go wrong? What could go wrong? That's why I tend to think that this is actually controlled demolition. Because if you had the rates down at zero, so if we pull this chart a little bit tighter here, When you have the rates down this low, that means they've just been giving away free money for all this time. We're seeing all this boom in the real estate market, and then they still had it all low like this. If we went into a recession right here, they wouldn't be able to do anything besides go to negative rates. That's the problem, and that's why they're raising it so fast. And you can see when you pull up to this chart here, when you zoom it in a little bit, you realize just how sharp they're jumping it right now. And the reason they're jumping it this fast, in my personal opinion, is so that when it's time to do demolition, they can drop it back down very fast. That's what I think. But there's nowhere to jump from. There's no demolition to happen, and that's their tool. Keep in mind, their tool is demolition. When I say demolition, it's dropping that rate down. So there's nowhere to go when it's down at zero. When the rates are down at zero and they're giving away all this free money, there's nothing they can do when they're in an inflationary recession environment. But they're pretending like inflation isn't as bad as it is. Probably because when you say, hey, Powell, I'm really curious how much my gas is going to cost next month. He'd go, well, we studied how much the railroads cost and how much the subway costs in New York. And according to that data, the inflation's only at 9%. That's what they do. They literally, hey, I'd like to know what the rent price is. Can you tell me what the rent price is? Well, we studied the Airbnb market, and the Airbnb market, like this is what they do over at the Fed. Oh, I'd like to know how much a steak is going to be next month. Well, we studied the tofu market in California, and so the tofu burger market looks to be pretty stable. Things are going all right over there, but I want to know what a steak is worth. Can I see what a steak's going to be worth next month? No. Well, we studied the tofu market, and according to the tofu market, the CPI is flat. Everything's fine. That's what they do over there. And then, inflation reduction bill. We're going to stop inflation by raising rates that is going to cause a market collapse. And when they collapse the market, back to this point before I ramble too much, when this finally goes down, when they drop it, that's going to make the dollar lose this artificial respect that it's getting. The reason the dollar is getting this artificial respect among the world markets and why the dollar is showing, in my opinion, artificial strength is because as they raise this, it looks like they're being strict. On the surface, it looks like the Fed is being strict with the overall market. Oh, well, the dollar, they're raising rates. They got it back up to 3% over there. Everything's fine and dandy over there. The market can totally handle them raising it to over 3% in just a few months. Yeah, no problem, right? But once they actually crash the market and the stock market has a real catastrophe in it, that's when I think they're going to reverse course and they're going to do exactly as the Bank of England did. Keep in mind, the Bank of England was acting exactly how Powell's been acting. They've been saying the same stuff. Transitory inflation wasn't transitory inflation. They've been saying, we're going to keep tightening up our policies. We're going to tighten up around here. They turned around and they reversed course just recently, and they're starting up QE again. Matter of time before Powell does it. Keep in mind, Powell has never said anything on paper. They're not obligated to any of these decisions on paper. Legally speaking, and by the way, there's nothing federal about the Federal Reserve, and there's no reserves at the Federal Reserve. Their whole name is the Federal Reserve itself is basically an entity. It's like saying the Inflation Reduction Act is to stop inflation. The Federal Reserve is like they're not federal and they're not a reserve. So I don't know where that name came from. I don't know whose idea it was, but there's nothing federal and there's nothing reserve about this place. But anyway, I digress. I think what they're doing is they're raising it as fast as they can so that they can drop it and parachute off while the economy collapses and suffers. And then they're going to turn around, start the money printers up, and act like they're the saving grace, just like the Bank of England is doing right now. The Bank of England is the most, it's telegraphing exactly what's going to happen in the States. So that's what I think is going on. And that's why I titled this video, What the Fed Doesn't Want You to Know. I believe personally, and I'm just going to go out and say it. I know if I say stuff like this, the algorithm's not going to like me over here. I know I should be using other platforms. So follow me on Instagram because I'm also going to be going over to another platform very soon. I wonder what the key words are to say on here. But anyway, if you, I don't even care. I think that this is controlled demolition. I think that this is the plan. The plan is to raise rates as much as you can and then basically pop the bubble. The more they raise rates, the more the bubble's going to pop. And the S&P, it looks like obviously there's been a big pullback in the S&P, but if we pull it back to the 5-year, pre-pandemic, which is right here, it was at 3,300 and now it's at 3,585. So all of that money printing, over $10 trillion printed. Over 10 trillion with a T was printed. It brought it up to here, but all of the stocks are being sold off and bringing it back down to pretty close to prior to the pandemic levels. Pretty insane to think about. All of that money printing and it doesn't stay in the market. Where are those dollars going? Where are they going is what I want to know. They're selling it out of the stock market. Where are they putting it into? It's showing that they're going into the dollar, and they're sitting on dollars right now. And I think they're going to sit on it until inflation gets too hot for them, and they're going to start throwing it at something else. My bet is it goes to precious metals. So what's interesting right now, all the top dealers that I know, I was talking to a big dealer in the country just yesterday, talking to him about the overall markets. And some of the largest bullion dealers in the United States right now are like 2 weeks backed up, and they're taking longer to fulfill orders now. So the thing is, it's like on a wholesale level, I can see realistic levels. I don't need to go to my local coin shop to ask him or anything. I can just tell you directly what the top bullion dealers in the country is going on. They are behind, and legitimately behind. They're not making it up. I can tell you that firsthand. There's situations around the country right now where these big bullion dealers are saying, hey, we can't sell for this entire weekend, because they're like trying to strategize how much their premiums are going to be. They don't want to sell it too cheap. So even if they have product, a lot of the big bullion houses are holding their product back to measure what the premiums are going to be when the market opens. That's what they're doing right now. And when I see that, it reminds me of what happened in the beginning of the pandemic when it dropped down to 11, but the premiums were up at 15, 16, 17, 18, even though the price of silver was 11. So there's going to be a big detachment in the premiums in the near future, in my personal opinion, because although the dollar is showing strength, the people that are holding precious metals right now, they don't care about that, because they believe an ounce of silver is an ounce of silver and an ounce of gold is an ounce of gold. You can tell them how much you want to pay for it because the dollar is so strong, but it doesn't change the fact that people are not going to be willing to sell that. And if they are, they're going to want to add a big premium to it. And I'm seeing that from the top down. People are wanting to add big premiums to their bullion, and that if not, they're out of product themselves. So I think what's a matter of time that's going to happen is a currency bubble is unfolding. Not just a housing bubble, not just a stock market bubble, but the underlying denominator of everything, which is the currency itself. You know, what's funny is people will work their entire life. They'll work their entire life for this money, for these dollars, and they never even study the dollar itself that they're working their life away for. Isn't that crazy? We trade our time for these pieces of paper, for these digital numbers on a screen that they can just digitally inject, change things up, change the rates, inject more, start the money printer back up, do all of this stuff with this money. And we're willing to work our lives away for that. But they don't teach us in college. They don't teach us in school what the underlying denominator of what we're paid in. And if somebody came to me and said, hey, we have all of these IOU notes out there. We're this much in debt. We have all this IOU notes out there, and we want to add some more IOU notes to it, and our money is good for it. We're the best money of money out there, the best thin air of all thin airs. I look at your balance sheet, and I'd go, hey, $31 trillion in debt. Your leadership, all they do is cause more and more debt. They do nothing to fight inflation. They do nothing to stop spending money. They keep shipping the United States money overseas. You know, it's a sad thing that's happening overseas, but you know what? How come our leadership isn't sending a few billion to Florida right now? Why don't you go help out Florida a little bit? It looks like they got hit by a hurricane. Maybe we should help them out first. Maybe we should help our country out a little bit instead of supplying other countries with warfare type stuff. It seems like common sense, doesn't it? But that's not what they do. You know, it's crazy what goes on in our country and how much money of ours that they export overseas and how much they don't spend and how they turn off our energy reserves, and then we beg other people for their energy. It's insane. And so when I look at about what's going on right now, it's hard to believe that the dollar shows this much strength in a market like this. That's what I really want to talk about the most in this video is it's just a matter of time before the Fed continues to raise rates and they do exactly what the Bank of England just did. It's just a matter of time. And looking at what's happened in the overall market, what's sad to say is I know that a lot of people in the stock market are in serious pain right now, but I think it's just warming up. I think it could fall below pandemic levels. I think it could easily pull down. I mean, look at during the pandemic, the S&P went from 3,400 to bottoming out at 2,100, 2,200. Now, the reason it didn't just have an utter catastrophe here is because the Fed started the money printer. The money printer go burr, remember that meme? That's going to become all too apparent in the near future. That money printer go burr meme is going to be reused over and over again in the very near future is my guess. My prediction is that they raise the rates until catastrophe unfolds. And once chaos unfolds, that's when they turn around and they start the money printer back up. And if you don't believe me, Just Google Bank of England money printer. Excuse me. Just do that. Go look up what Bank of England's doing right now. And they're acting like everything's all fine. Everything's fine over here. But when they do that, what happened to the bank's currency? What happened to the euro? When they start their money printer, what happens? People start degrading that currency. They go, oh, they just print it to oblivion. That currency is not worth as much as they think. We're gonna go to dollars right now because they're tight on their policy. But when they reverse, when Powell reverses his course with the dollar, that's when the dollar pops and the DXY plummets. And that's when the dollar, if there's anything that I've talked about on my channel a bajillion times, more than repeating all of this information over and over again, it's the fact that when the DXY goes down, precious metals skyrockets. That's what happens. And we could study the charts back at what happened from 2009 to 2011. There could be more pain in the near future in precious metals. Or it could be bottoming out and we could see the top on the dollar. All I know is I can't time exactly when this will happen, but I do know that Powell he's playing with fire right now. He's literally using a squirt gun of gasoline to fight an inferno. That's what he's doing. And he's doing it with a smile on his face. Like he's some sort of like he's doing this great thing, raising the rates this fast. He's going to raise the rates this fast. The market has a collapse, and he's going to turn around, reverse course, and start the money printer back up. And the worst part about all of it, the thing that makes me the most sick about all of this is when Powell finally reverses course, when he does start the money printer back up, just like they did in England, I think what's going to happen is he's going to come out there and act like a savior. Oh, the money printer go burr again? Let's all dump our money in the market. Let's go do that. People need to right now, before this happens, and this is why I want to make these videos, because I see the telegraphing here. I see somebody with a loaded fist, and I can see the telegraph coming before it goes and it gets the average investor out there. They're telegraphing right now, and that's why I make my videos on my channel. I hope I earned your subscription if you want to subscribe to the channel and help it grow, or follow me on other channels or check out my business. All that information is down in the description. But I think that this is their plan, because then they can come out and say, oh, this is a catastrophe. The entire world is plummeting. It's not just us. The Bank of England is doing this. All these other banks are doing it. It's not just the dollar plummeting. All of them are plummeting. And here we come to the rescue again. We're going to go print another $10 trillion or whatever they want to print this next time. And I just can see it coming. I can see it now where they start the money printing back up. But the interesting scenario this time around is just like I showed you on the charts a second ago, we have never raised rates into a recession. We have never raised the interest rate sharply while we're in the middle of a recession. This is exactly why they changed the definition of a recession. They changed the definition of a recession because they don't want the general public to know that they're raising rates during a recession. They just don't want you to know this right now. And as they raise rates during a recession, that means when the market finally collapses, they're going to have to start the QE back up. And when they start the QE back up, it's going to cause worse inflation. So they're raising rates into a recession, which is unprecedented. And at the same time, we have inflation that's out of control while we're in the middle of this recession. So they're acting like they're going to be able to fight 9% inflation by raising it to 3%, which isn't even going to put a dent in the inflation. Meanwhile, our leadership is exporting billions and billions of dollars out there overseas and spending $400+ billion in a glorified climate bill that they disguise with a facade saying that it's an Inflation Reduction Act. It's all facades. The Fed is a facade. The leadership we have is a facade. It's all a facade. It's a big front. And they're willing to sit there and smile at you to think that you won't know any different than what they say. Oh, it's an Inflation Reduction Act. That must be there to stop inflation. Oh, they don't. Oh, wait, they're spending $400 some odd billion on windmills? How does that stop inflation? How does that lower our gas bills? How does that do any of that? Wait, you didn't restart the Keystone Pipeline? You're not making it easier to pump oil in our country right now? You're still begging OPEC. You're on your knees for OPEC and Russia. While you're exporting to their enemy, you're exporting to their enemy our money in the form of warfare products. That's what you're doing? And you're thinking you're going to stop inflation that way? Interesting. And then while we're doing that, you're going to have our allies beg that enemy, right? That's technically, if you supply an enemy's enemy, then you're technically their enemy too, right? Not enough people are bringing that up and talking about it, and that scares me a lot, quite a bit. And so, while all this is happening, they're going to go into a rough winter over there and start begging the Russians for their oil. And Putin is probably going to sit there and go, "Ha, really? Our oil? You mean my? Oh, you mean our? Oh, interesting. You need my help right now. Interesting. The timing is impeccable, isn't it? The timing's impeccable about what's going on right now. And what blows my mind is people on in our chat room right now. As you all know, I don't edit my chats. Everyone can talk there. There is no I don't click. Anyone can talk in the chat right now, and I make sure the chat's posted when I post my videos, which will probably mess me up in the algorithm. But you know what? I'm still going to do it anyway. But all of us, even though this is there's a good amount of people in here, I think, what is there, 100 some odd people in here? We are in a little bit of a bubble ourselves because the overall masses of the world don't know this. They don't know this information. A lot of us go out and we seek this information, and we find out what's really going on in the world right now. We realize, oh wait, the Fed, they can't just keep increasing the rates like this without causing a catastrophe. They're probably doing this on purpose. But not everybody thinks like that. The mass public, I feel like they're just sitting ducks right now. And they don't realize that, hey, these stocks can't be trading at 100x price to earnings ratios while they tinker with the federal funds rate and while they tinker with the markets worldwide. We can't be having these ridiculously overvalued stocks and these ridiculously overvalued houses in the real estate market as well. Like, who's going to be able to afford rent? And if they can't afford rent, what happens to the person that has an adjustable rate mortgage that their prices are skyrocketing on their mortgage payments? And what if they don't have the renter's money to pay for their mortgage? That causes a foreclosure environment, doesn't it? Just like it did in 2009. And right now we're seeing skyrocketing rates on mortgages, back up to nearly 7%, probably be well over 7%. It's scary to me because I really do. It's hard to think that it's not planned. With the way it's going on, like if I had to play diabolical chess and I looked about everything that was going on right now, I would just think to myself, I don't know if I would even have that good of moves myself. Make it an Inflation Reduction Act that secretly spent over $400 billion on random stuff. Come up with all of these ways to basically just blatantly lie to the public, and think that they're not going to go through the details or learn anything about it for themselves. And it's scary to me because although we're looking stronger and stronger in the U.S. right now, I think that it's like a house of cards. I think our leadership, I think Powell himself, I think the Fed and our leadership, they act like they're out of a bunker that's made out of a house of cards. They're acting like their house of cards is made out of concrete right now. And it's just, all it's going to take is one flick one thing that I think that could happen is it wouldn't take, say they want to back the ruble to gold, or they want to back the yuan to gold, or they want to do something along those lines to make their currency look better than the dollar. I don't even think that that's going to be the case. I think the case will be if more and more nations worldwide start going to a universal currency like gold, like silver, like Bitcoin, whatever it is that they do. If they decide to promote a sound money type environment, it might not even mean that backing their specific currency to that sound money itself. That alone could destabilize. If people start accumulating gold and trading in gold, or they're trading in Bitcoin, or whatever it is that they're doing, and they're doing things outside of all fiat currencies, not just the dollar, not just the ruble, not just the yuan, but they're outside of all currencies themselves, and they start promoting sound money itself, that's where I think could really start exposing this bubble. And there's just so many different wild cards at play here that make me realize that I wouldn't want to be in the stock market right now. And I'm not in the stock market right now. So all the people holding their money in a bunch of digital stuff right now, I wouldn't want to be in the stock market myself. And I wouldn't want to have too much money in the bank without a plan of action with that money either. Because as we're seeing in other countries right now, there's people literally robbing their bank to get their own money back. It's really happening right now. That's a real thing worldwide, where people are going and robbing their own bank to get their own money out of it, and then going and turning themselves to the police and saying, I robbed the bank because they wouldn't give me my money. And we think we don't realize that could easily happen to many more places. I believe, what is that, the Turkish lira or something like that, where that's happening right now? But more people need to realize what custody is right now. And custody is actually owning the item, actually owning your money in the real world, not just on a digital screen on your phone, or not just in somebody else's bank, not in the stock market, all this different stuff. That's where the money gets trapped in a sense. So more people need to understand what custody is, but more people also need to understand, like we're talking about in this video, that you can't just raise rates like this. And if they're raising rates this fast, it's only because I believe that it's going to be a controlled demolition on the way down. And when it falls down, now they can lower the rates from 3% and start the money printing back up and drop it down to zero and act like they're saviors again. That's what they did at the beginning of the pandemic. Look at July 2019. You get to 2020. This is March of 2020 right here probably. Yep, here's about March of 2020. This is when the pandemic starts. What do they do to fight the pandemic? What did they do? Well, they had the rates up at 2.4%. They dropped it down to zero again. They literally did this already. So this is like literally reloading your ammo. So right here, you're raising rates, and now you have the tool at the Fed to go, okay, we can drop rates now and give away a bunch of free money now. Okay, well, we're going through a big problem. We have a pandemic. Okay, drop it down to zero again. So they're raising it, and ironically, they're even higher now than prior to the pandemic. Prior to the pandemic, they got the federal funds rate up to 2.4%, and now we're up at 3.08%. So what does that tell you? They're raising rates into a recession. We're already in a recession. They're raising the rates sharply into a recession, and acting like nothing will happen. Acting like nothing's going to happen. It doesn't seem like that good of a strategy when I look at it. I don't know about you. You let me know in the comments. But I'm just telling it like it is. And a lot of channels out there, they don't actually show you the charts so that you can see it for yourself. And this is when they're talking about raising the rates, they're talking about all that stuff. This is the actual chart. This is exactly what they're doing here. And what does this cause? When we go to the mortgages, we see a sharp jump in the price of a 30-year mortgage. When it was down at zero at the beginning of the pandemic, it was down to 2.6% on a mortgage. You were getting a 30-year mortgage at 2.6%. If you were able to get some good investment properties lined up at that rate, congratulations, you nailed it. But now, if you want to get into real estate, you're paying a nearly 7% rate on your mortgage if you're lucky. That's insane. And people think that's not going to cause a housing bubble. In the housing bubble of 2008, it was up at 6%. It's higher. 30-year mortgages are higher now than they were in 2008 at the peak of the housing bubble. They're higher now than they were in 2008. And adjustable rate mortgages are still out there, by the way. They still exist, by the way. Not as bad as back then, but still, they exist, and we're sharply raising the rates during a recession, and at the same time, so many people went into real estate to try to protect them from what was going on in the world. They looked at it as a protection type asset to be into real estate. And what happens when that bubble pops and they can't afford their mortgages anymore? That causes a lot of foreclosures, doesn't it? Isn't that what happened in 2009? Interestingly enough, in 2009, they didn't raise rates into the recession. They dropped rates into the recession. Now they're raising rates into a recession. It's insane how backwards this is and how obvious it is. I think people a year from now are going to look back and go, I can't believe it was that obvious and I didn't even notice it. I really do. All the talking heads on CNBC, all the people on all these news outlets and stuff, they're going to look back and go, I can't believe it was that obvious and we didn't realize we were on the brink of the worst recession we've ever been through, arguably a next depression. It was so obvious, right? And what's crazy is I see, maybe I would think otherwise if I saw leadership that actually was trying to fight what was going on, was actually trying to stop a recession. How do you stop a recession? Well, we start drilling a lot of oil in our country. That'd be one way to stop it. How would you get the oil prices to go down? Probably shouldn't drain our strategic reserves because they're strategic reserves. They're called that for a reason. They're strategic in case we have an emergency like what happened in Florida, like you don't care about over there at leadership, about how one of our actual states got hit by a hurricane. Should probably care a little bit more about that. It's insane. That's what the strategic oil reserves are for. If people are really suffering in a state that got nailed like that, well, then we should give them some of the strategic reserves down there and help them out. But we don't just go and we try to lower the cost of oil by a couple pennies or whatever they did to drain our own reserves. That's what they do over there. How do you drop the price of oil? Well, you drill more oil in your country. It's that easy. You don't beg Russia for it. You don't give them more power. I mean, it's insane. It's like the everything that's happening right now is so backwards. It's kind of unbelievable. It makes me believe that I'm actually in a simulation. Maybe Elon Musk is right. Maybe Elon Musk is right. Maybe it is a big simulation after all, and this is just some big game. Maybe it is. Hang on, I'm gonna take a swig of this coconut water really quick. Wonder what this stuff's gonna cost. I think this is like what is this, $50 a liter now for coconut water? This stuff, this is liquid gold right here. I'm gonna start buying some extra of that stuff. I bet you that's not gonna be cheap in the future. But the more I keep taking this stuff apart, and the interesting thing is, again, I'll show you the guys the same charts. Everybody in here probably has seen the shadow stats chart. If you haven't checked this website, shadowstats.com, I don't know who runs the website. I don't know who's in charge over there, but they do a great job. They do a great job. I have no association to the website, but I got to give them a shout out because everything that they post on there, this is just their CPI chart that shows if they use the actual basket of goods from 1980, how the inflation rate really is. But I really, really recommend doing a deep dive on this website. We won't go through everything on this website now because there's a lot of stuff over there, but I have to give them a big shout out. Shadowstats.com. Don't know who runs it. Don't know what their team's about or anything. Love what they're doing over there. And it's quite amazing that the site even exists where people can go and view the real information out there. So shout out to them. But this is the CPI chart that shows what the inflation levels really are and how it's closer to 20% than it is to 10%. If you use the same basket of goods that they use, that they change the data, just like I was talking about earlier in this video. If you wanted to know what the price of oil is going to be in your state, Powell would tell you, okay, well, we studied the railway system. In the railway system, the average ticket price to go on the rail station is only $20, and it stayed $20, so obviously the prices aren't going up. And you're like, no, Powell, I want to know how much it's going to cost for gas to go in my car, my personal car. I want to know. Well, we studied the subway system in New York, and the subway system in New York, like, this is what they do. I want to know what a steak is worth. Okay, well, we studied tofu patties at Whole Foods, and they're all the same cost, the tofu patties at Whole Foods. So it's all fine. It's all dandy. There's no problem there. No, I want to know what a steak is. That's what they do, and this is the data that shows that. You show the real data, and it shows that we're closer to 20%. Now, how long are people going to sit with their dollars in the bank when it's getting burned at 20% year over year? So maybe they sit on their dollars for 6 months. Maybe they sit on their dollars for a year. Everyone's selling out of the stock market. When you sell a stock, where does that money go? You sell your stock, you sell your Tesla, your Apple, whatever it is. You see that the stock market is clearly pulled back quite a bit. Where does this money go? Well, it goes into the bank. Goes into Chase, Bank of America, Wells Fargo, whatever your bank is, it goes into there, right? And then that money is sitting there stagnant, which is why you see that the M2 has just been sitting flat, but it's recently starting to uptick a little bit. We've talked about this in prior videos. When the M2 goes down like this basically means people are selling out of the stock market and sitting on their dollars in the bank. And as soon as this jumps back up, it means they're spending those dollars out of their bank accounts and they're doing something with it. I think that this chart is going to inverse and it's going to start skyrocketing back up, and people are going to start dumping their dollars as fast as they can into other assets, into things that they believe are a safe haven. And what is a safe haven? I think it's precious metals. That's kind of that's why I'm so bullish on precious metals. Now, is this the bottom on precious metals? Maybe. Is it the top on precious metals? Absolutely not. Absolutely not, in my personal opinion. So I can't call a bottom, but I certainly can say that this isn't a top. Because when you see the dollar this strong, that means it takes less dollars artificially to buy the precious metals, to buy gold and silver. I think that it's just a matter of time before that changes. And when the DXY plummets down, precious metals will skyrocket. How would the DXY plummet? How would this M2 start skyrocketing up? Well, it's simple. As soon as Powell does exactly what the Bank of England just did, the DXY plummets. It's really that simple. And when will Powell do that? As soon as the market has a real catastrophe. A lot of people are considering this right here on the S&P a catastrophe. That ain't nothing. Excuse me. This isn't nothing yet. In my personal opinion, that stock market could implode. I think the stock market could fall down to pandemic lows. And I know it sounds crazy, But we're already seeing a lot of people would have said that when the stock market was here, we were talking about this in the channel. I want to start hiring someone to do clips so we can bring up clips from in the past when the stock market was up in the 4,000s. And I'm talking about it's going to go back down to pandemic levels. And a lot of people are like, you're crazy. They printed trillions and trillions of dollars. It'll never fall back down to pandemic levels. Well, it turns out it kind of is. It's pretty close. Pre-pandemic levels was at 3386. Now we're at just under 3,600. So we're about, what is that? About 250 shy of the levels it was prior to the pandemic. That's insane. $10 trillion plus dollars printed couldn't even save the stock market. Still is falling down to those levels. Now, when the pandemic unfolded is when it dropped down to a bottom of 2,200. But I think that the stock market could easily fall back down to the low 3,000s, if not 2,500 range. It could easily happen. And when that happens, when this final candle blows out, that's when Powell will start the money printer back up, drop the rates down to zero again, and start up QE. That's what I think is really around the corner here. And if that happens, all of this trust that the world is putting in the dollar right now, acting like it's the cleanest shirt in the dirty hamper, acting like we're strict by raising the rates as fast as they did, that's when the dollar index plummets. And the fact of the matter is, do you want to bet? This is the best way I could put this right now. Do you want to bet on this continuing to make new highs? This is the DXY index. Let's pull it back even further. Let's pull it back to, so this is 2009. This is the last recession that we're in. It was down at 71 on the DXY. Now we're at 112, peaked out at 115. Do you want to bet on the dollar continuing to get more and more buying power? Do you want to bet on the dollar to continue getting more and more strength in this market? Keep in mind, this is a country that's $31 trillion in debt. $31 trillion in debt, doing all they can to cause more and more inflation, pretty much. Anti-Inflation Reduction Act, whatever they're calling it. That's a inflation skyrocketing act. That is meant to cause more inflation, what they just did call it. And the fact that they're willing to name it that, it just tells everyone everything about them. Everything that you need to know about our leadership. Just look behind the facades that they put up and they smile like they're helping you. No, they're hurting you. At the same time, the same way they did with the stimulus packages, they will put a dagger in your back with a smile on their face. That's what they will do. And that's what they are doing, and they have been doing it. But do you want to bet on this continuing to go up? Or what is precious metals? Precious metals is basically shorting the dollar. If you wanted to bet that the dollar is going to go back down to 90, is going to go back down to these levels around here, which the chart seems to suggest that it can't just keep going skyrocketing up. At some point, it's got to take a breath. And when the dollar does, if you want to take a gamble on the dollar taking a breath, which doesn't really seem like a gamble, it seems like what's going to happen, precious metals will skyrocket if the DXY falls. How do I know that? Well, I've brought this up in prior videos. You look at 2009, this is right after the last recession, you saw that the DXY went from its peak over around 90 down to 73. And at the same time period right here, when the DXY fell from here to here, just that tiny little, what is that, 19-point drop, that 18-point drop caused silver to go to $50 an ounce. That little drop right there caused $50 an ounce silver was that. Imagine if it goes from here down to here. Imagine if you get a 40-point, 30-point drop in the DXY and Powell starts printing the money printer again, dropping the interest rates back down to zero. People lose the respect of the dollar that it's artificially gotten over this time period. It would skyrocket everything that wasn't the dollar. It would skyrocket all the assets to put the money into to protect them. That's what I see happening in the near future. To me, this is basically loading up the spring. As this continues up and up and up, the spring of precious metals is getting tighter and tighter and tighter until finally the DXY plummets and the spring unloads and goes to the moon. It's just a matter of time. And now I'm not one of the people that's going to say, oh, you have 1,000 ounces of silver, you're a future billionaire or whatever. But I'm going to say it's a way to protect the money. It's a way to protect what you have, because I wouldn't want to have my money in dollars right now. And if I do have my money in dollars, it's with a plan of action to take advantage of this exact situation that's happening right now. That's what a trader does. What a trader does, if you're involved in trading precious metals, if you're involved in trading stocks, whatever it is, you want to trade your asset at the right time when people are overvaluing the thing that you have. You want to use that overvalued thing to then buy an undervalued thing. That's just the art of being a trader. You want to unload the thing that you have that's overvalued and buy the undervalued thing. It's that simple, right? Well, what's the overvalued thing? The currency itself. The currency itself is the overvalued thing, in my personal opinion. And what's the undervalued thing? The stuff that the currency is buying. The stuff that the currency could buy is undervalued because the currency itself is overvalued. So I want to use that currency that's overvalued to buy the things that that currency is making undervalued in said currency. That's my play. I don't know what your play is out there. A lot of people, they might agree, they might disagree with me, but that's what I think is happening here. Because what do you want to do? Do you want to put your money in a bond? Do you want to trust a government bond? I don't. You want to tie your money up in a bond over here? You got the 30-year paying you 3.7%. If you tie your money up for 30 years, won't even get you half the rate of inflation for tying it up for 30 years. Yeah, I'm going to pass on that. Don't have any custody of your money for 30 years and you get a measly 3.7%. 4% to tie it up, that's interesting. It's higher on the lower term on the 20-year right now than it is on the 30-year. That's interesting. You want to tie your money up for 20 years for 4%. You want to tie your money up for 10 years for 3.8%. It's like, I don't want to tie my money up for 30 days. I don't want to tie my money up for nothing right now. This to me, it blows my mind because the people backing these loans here, the people backing these bonds are the same people that are $31 trillion in debt. I don't want an IOU note from these people. You want an IOU note from them? I don't like their IOU notes. They got a lot of IOU notes out there. I don't want one of them. 31 trillion IOU notes out there. I don't want one of their IOU notes. I'm not really cool with those IOU notes. And I'm going to pass on that. Now, if you want bonds over there, you can go and get an IOU note from them, but I'm going to pass personally. Don't really like their balance sheet. Your balance sheet, if you want a loan, if you want to get a loan from a banker, you better have a clean, perfect credit, perfect balance sheet. But if you want to give them your money, they can show you that on their balance sheet. And people do it. People actually give them their money. That is insanity right now. That is insanity. I don't want an IOU note from them. Personally, that's how I feel about it. But what I do want is I want to have custody of my money. I want to have custody of my assets. I don't want to have to go to a banker and beg for my money. Don't want to go there and wait 2 weeks for them to give me cash, which is already worthless pieces of paper. I don't want anything to do with them. I want to have my assets and I want them protected. I want a universal asset that is considered money worldwide. I want to be able to go to a different country and say, hey, I got money. This is my money. And they go, okay, I don't care about if it's a dollar or whatever. It's gold. Gold's gold. Silver's silver. And I think the world's going to start realizing that in the near future. And it actually makes me bullish on Bitcoin too. I tend to think to myself that if Bitcoin succeeds and more of these countries adopt Bitcoin and they adopt gold, it's going to be like hand in hand. It's going to be a good thing. A lot of people don't understand this in precious metals. If Bitcoin succeeds and they stop bashing on Bitcoin, right? And I've been one of those precious metals advocates out there. I mean, I own an auction house of precious metals. All I should be doing is preaching precious metals, right? I shouldn't be talking about Bitcoin. It does me no good talking about Bitcoin. But something I will say is that if Bitcoin succeeds and Bitcoin starts getting adopted by more and more countries worldwide, instead of a currency, they go to Bitcoin as a reserve asset, and worldwide they consider Bitcoin a reserve asset, that plummets the price of the dollar, doesn't it? What happens when the dollar plummets? Precious metals skyrocket, doesn't it? So if Bitcoin succeeds, a lot of people in precious metals don't realize that, in my personal opinion, it would skyrocket the price of precious metals. Bitcoin really isn't your enemy. The enemy is the dollar. The enemy is the dollar having artificial strength. It wouldn't have to be considered an enemy, but what makes it an enemy is when you have a dollar that is artificially strong that makes everything else cheap in comparison to it when it's really not that strong. That's when it makes it a problem. And anything that puts a chink in that armor and exposes that it's really not that strong, it's a big ally of precious metals. A lot of people don't understand that. And that's the way I look at it. The way I look at it is anything that exposes the fiat currency bubble, and that's not just the dollar, all fiat currencies worldwide, especially the dollar. It puts a chink in that fake armor that it has, and it exposes it. And so that's kind of the way that I've always looked at it. And it's not going to take backing a currency to gold. It's going to take more and more nations worldwide, more and more countries to start actually accumulating sound money, to start thinking in terms of how do we exit fiat currencies. If more and more countries worldwide start doing that, that is what makes the DXY fall. That's what makes the euro fall. That's what makes the yuan fall, the ruble fall, is if all of these countries worldwide start going, look, we're kind of sick of fiat currencies altogether. We don't want the dollar to be the reserve currency. We don't want the ruble to be the reserve currency. We just want to have something that's worldwide and the same asset. And that's what it was supposed to be. Keep in mind, this is the way money was designed from the very beginning. It was meant to be sound. It was meant to be backed to something. It wasn't until the U.S. decided to renege on the deal. They backed out of it. It was what they did that caused this big crisis. When they basically said, hey, we cannot allow there to be a gold standard anymore. None of the currency is backed to gold anymore. Ironically, actually on the auction block this week, I have an actual piece of silver that was one. That's something that I could talk about, because then I can shill my business and actually give you guys a history lesson at the same time. Look at that. It's a win-win. But this is actually something very interesting. If you want to talk about pre-gold standard, I love pieces like this. So in my auction house, you guys all know I own mineralexchange.com, but here's an assay bar that I have running this week. Let me show you guys. You see, it says the United States Assay Office at San Francisco. This was during a period in the early 60s when everybody was redeeming their silver certificates. So there was a situation, there was a crisis unfolding where all of the public was going, look, we don't trust the U.S. government anymore. We want our actual silver. We want the real pieces of silver that these pieces of paper are supposed to be back to. And they rushed to get these bars from the San Francisco Assay Office. This is one of the earlier ones that actually has the hallmark still on it. And I'm lucky enough to be able to auction this piece in my actual auction house, which is insane that I get to get stuff like this in. But it's an authentic. Basically, they call them a grease bar. And later on, there was such a rush of people trying to get these bars that later on, a lot of people are silver collectors in here. So I'm sure you guys know what a grease bar is. It's the bar that has the original grease pen from the 60s and 70s. Rarely do you see one that has the hallmark in that left corner there, because they started getting in a rush from the general public rushing to redeem their silver certs because they knew they were going to back out on their loan, on their agreement. And when they did that, they stopped hallmarking it and they just started pouring it and writing in pen really quick. So you'll commonly see grease bars with no fineness on it, and you'll see no hallmark on it either. And this is one of those pieces from the very beginning when they actually were hallmarked and actually had the fineness on it. The other grease bars that aren't as valuable will just have the penmanship on it. And that's actually not written by me or any bullion dealer. That's actually written at the SF Mint, that 106 troy ounces, 106.25 troy ounces. Most of them just have the pen on it, and they don't have that hallmark. But this is during a period of time when people were worried, and they're saying, I don't know if our money's going to be back to anything anymore. We want the real metal. And so that is an example of what I'm talking about in my video, is when the general public doesn't trust that the money's actually back to something, they go to the actual metal itself. In this situation here, they said, I don't trust the U.S. that they're actually backing their money to silver and gold. I want the bar. And so this is from 1964 to 1968, they did the exchange program, ironically, right before they dropped the gold standard in 1971. So all the people that rushed to get their grease bar from the SF Mint were pretty smart, because they ended up actually going back on the gold standard just a few years later. So this is a bar from like 1965-ish, 1964. It was one of the first ones. Only a handful of them have that actual stamp on it. Right now, the bid's at $3,100 on it. So pretty good price considering how collectible those bars are. But that's the auction of the week. I put that one in the top spot because I just think that's just way too cool of a bar. But that's the kind of stuff it's just proof of what happened in our own country. People were rushing to get, and that's a government issued bar. That's a legitimate United States Assay Office at San Francisco bar that proves what they were trying to do. They used to have the dollar bills that were, if you Google a silver cert, those pieces of paper, those silver certs, are old dollars. Now that's what a dollar was supposed to be an instrument to be backed to silver and gold by the United States government. And this is one of those government issued bars when someone called their bluff. How many more countries worldwide are going to start calling the bluff of the dollar again? there couldn't be a more perfect way to show my company than this right here. I don't know if there's the timing is pretty good. I remember as I was making this video, like I always like to talk about my business, obviously, because I like talking about it's my hard work is building my auction house. But it really does tie exactly what we're talking about in this video pretty well. This is when someone called the bluff of the United States government saying, hey, we don't think you have as much silver as you say you have. We don't really trust your dollar anymore. We want to redeem our silver certs for an actual silver bar. And keep in mind, it's actually extremely illegal. If someone has a fake one of these that has the U.S. Assay Office, I think that it's actually like a felony offense to have a fake one. I think that there's like a crime that having that actual hallmark is a really, really big deal. It's actually like written into law from an assay office in the U.S. that you have to be a legitimate government issued bar to have that logo on it, and this is one of them. Pretty crazy to see that, but someone can actually get that, which is insane. That's just such a cool piece, in my opinion. I'm stoked to get that one in. But that just shows you exactly what the country was supposed to do. We were supposed to have money that was back to those instruments there. It was back to the silver and gold. And then when more and more people, what happened is, and if you read this right up here, I don't want to read the whole thing, but there was an exchange program from 1964, from March of 1964 to 1968. And so it was only a 4-year window. And that 4-year window, so many people were redeeming their silver certs that they had to shut it down in 1968. Just for after 4 years, they depleted the silver reserves that fast, and they were making these bars so quick that they stopped putting the hallmarks on them. That 95% of them don't have that hallmark because they were just rushing to get them out of the door to pay people in silver. That's what I think is just around the corner right now. I think that there's going to be more and more people lined up to get real sound money and get out of fiat currencies just like they were in the 60s. And that's an exact example of that. So that's basically a perfect tie into what I was talking about here. But as more and more people are sitting in dollars, they're going to start realizing, hey, this is lofty. We're going to have to throw this somewhere. And I think they're going to throw it into precious metals. That's what I think is going to happen. And then at that point, it's going to expose that the dollar is overvalued. And just like I think someone said in the comments over here that, hang on, might be a little bit before, but someone said in the comments as I was talking here that one of the countries bought a few billion or a bit of gold recently. And I think more and more people are going to start, not people, but more and more countries worldwide, more and more nations worldwide. I believe that they're going to start promoting sound money again. And that's what will basically put a chink in all of the armor of all the fiat currencies worldwide, especially the dollar. But let's get to some comments here before I stop this live stream. I'm going to try to keep these live streams around an hour, because if we go a little bit over an hour, then people don't want to watch it later on, and I want to make sure people can watch these later on. But one of the things I want to talk about in my videos, though, and although obviously I have the incentive to get more people onto my auction site, but I'm also going to start exposing what the premiums are, what the true premiums are. So this is obviously a rare bar, which is why it's 3,100. It's over spot, obviously, and I think more and more generic bars are going to be over spot as well. But that's quite a good deal, considering that the small version of these bars, if you look up like a 5-ounce SF assay bar, they go for like $1,000 an ounce. Extremely collectible bars. So it's actually quite an opportunity to get a lot of intrinsic value and have the rarity value in addition to that. But literally, this same bar in a 5-ounce or 6-ounce variety is literally going for $6,000. I think on eBay right now, there's one of them that's like $8,000 they're asking for it for a little 5-ounce version. And this is actually like a 106-ounce grease bar. Do I have it over here? No, it's in the back safe right now. I would normally show it on video, but that's something crazy. But what I'm doing with my website is I'm going to start exposing what the real premiums are. So right now we have some palladium up. In addition, the palladium right now, it's at 1,600 and 1,100. Even with the buyer's premium, the 10% buyer's premium, it's under melt right now. So will palladium go under melt or will it go for over melt? We'll find out. We'll find out what the real palladium price really is. A lot of the silver bars, I mean, this right now is just barely over spot. But I specialize in a lot of collectible bars, but as I put more and more generic up there, we're going to start seeing what stuff is really worth, which is going to be interesting as that keeps unfolding there. But one of the things that I get worried about with the online world is if I talk about the stuff that I talk about, maybe they end up taking me down. Maybe like at some point, if more and more people start exposing what's really going on in the world, let me pull this back here. Um, what happened? One of those. What's the guys that? I don't even want to say their name on this. His name on this, but whatever. I don't care. What's that? There's like his name. Why don't I should not be forgetting that Tate. That guy Tate got taken off of every single platform universally at once. Just boom, taken out. And he said a lot of crazy stuff. Said a lot of stuff I agreed with. Not a lot of stuff I disagreed with. A little bit of stuff I disagreed. Very, very like 0.5%. Anyway, he got taken off of all platforms, right? Then I'm starting to watch these videos and they're going, the things that we should be focused on is our emails, the phone numbers, things that people can't take from us. And that's what I'm so excited about with my website, that everybody that signs up for my auction house, not only do they get the free data to see what stuff is really going for and find out what the collectibles values are and what silver and gold's values are in a real free market where auctions start at zero, but also that I'm able to stay connected with people. They can kick me off of whatever platform, but they can't take my emails. They can't take the phone numbers. They can't take the data. They can't take away the core. So that's my biggest thing is I want to have a core of collectors, a core of people out there that know the markets, that know silver and gold, know what's going on. And I have that email list so that even if I get taken off of Instagram or I get taken off of whatever platform, I still have I own mineralexchange.com, and I also own 100% of it. So I don't just talk about these companies because someone's kicking me $1,000 bag in my back pocket. I own 100% of the company. There's not even a 10% owner of the company. I own 100%. There's people trying to be part of it, but I own 100% of the company. So I don't need to put paid advertisement or anything like that. So when people sign up and they register to the website, I give away all the data for free so they can see there's almost 500 auctions now that have been done. So you get to see all that price data for free. But at the same time, we're able to stay connected. So even if you don't intend to bid, even if you just want to watch, even if you want to do that, please sign up, register to mineralexchange.com just so that we can stay connected no matter what, which is if you want to. But if you want to stay connected, if I start talking about all the things that I really want to talk about on my channel, who knows what could happen. But wanted to bring that up as well, that it is a way people need to start owning their ecosystems. They need to start owning not only their money, having custody of their stuff, but also having custody of their assets. And also with social medias and stuff, there's too much power being leveraged on one of them. And more people are telling me to go to these other platforms. And I'm starting to agree. I'm starting to realize that maybe I should be on more than just YouTube, Instagram. Maybe I should start doing more stuff. And so I'm starting to realize that as I branch out more and more and more, that's a good thing. So whether it's growing my website, growing my business, growing more on YouTube, growing more on this other one, Rumble, all these different things, I want to start making an account across the board and start posting it across the board, putting the podcast on Apple, putting everything all across everywhere so that there's somewhere to stay connected with everybody no matter what. Because there's not going to be, I don't think the algorithms are going to like people going and saying, hey, the Fed is literally doing controlled demolition on you. Everyone around you in leadership seems to be lying and putting up facades that aren't the truth. I don't know how long we're going to be able to say those kinds of things. I don't know. I'm just saying, just my opinion for whoever's listening to this. I don't know. But I just think that there's going to be some weird stuff going on. But anyway, let's get to some more comments. Let's get to some more comments around here. Lock in a few thousand in bonds before November. 9.42% is decent. Kenneth, I wouldn't want to lock up my money. I make too much money moving my money. I think more people need to build businesses. That's what I think. Like people ask me all the time, like, how much silver do I need to be rich? I say they're like the best thing that you could possibly be doing right now. I would personally rather have a business that I've built from nothing that consistently makes, a certain amount of money a month than to have some big lump sum of money with no plan of action. If you have a big lump sum of money with no plan of action, it actually makes you feel a bit uncomfortable. You would think it would give you comfort, but it actually doesn't because you don't have the consistency. People that have a business can change their prices. Why the dollar store go from $1 to $1.30 or whatever? Because they own the business. They can change the business. And so if you own the business, you have your own money printer and inflation doesn't affect you. But 9 point some odd percent won't mean anything if inflation's really around 20%. If you're losing, that means you're still burning 10% of your capital year over year. And also it means if it's at 9 point whatever percent, what happens if inflation goes to 30%? What happens if inflation goes even higher than it currently is? Because from what I see in the leadership, all they want to do is create inflation. All they do is spend money over there. They're the worst savers ever. They're like a child with a checkbook. They really are. And they just want a bunch of ice cream. That's what they want. They want their child with a checkbook, and all they want to do is eat ice cream. They got no other plans of action there. They don't know how to save money. They don't know how to preserve money, the whole thing. Bite Hunter in the house. I really appreciate the super chat. He says, when people buy silver, when people buy silver, are banks a safe place to keep it? Should silver owners hold it at home? I can tell you my opinion. Nobody hold me to this, but I think people should have protection. I think people should know their neighbor. But at the same time, if somebody's your neighbor and they say, hey, we have a very nice safe in our garage, hold your gold and silver in our garage because we have a nice safe in our garage. I'm going to pass on that. Even if I knew my neighbor, I'm going to pass on that because, and this also goes for safety deposit boxes. They might have a fancy locking mechanism. They might have a fancy thing. I would personally buy my own TL30 safe and own it myself. You know, you can get third-party insurance or you can do whatever, but I think that I personally would want to have custody of it. I don't want to give it to anyone else to have custody of it. That's what created the problems that we have right now. And this is the only feud that I have with Peter Schiff. It's the only problem I have with him. Like what he doesn't understand is that when you give away custody, it's what's created the entire problem that we have at hand in front of us. When I showed you the assay bar on my website, right? It's a great way to advertise Mineral Exchange. Really is. That's my auction house, mineralexchange.com. Make sure you register there. But at the same time, that's an exact example of what happened when we trusted a custodian. We trusted a custodian with the silver. And what did they do? They said, we don't know if we have enough silver to supply this demand. And they only did a 4-year window for people to redeem their silver certificates. That's one of the lucky people that actually got a bar out of the SF Mint before they closed it down. But that's what happens when you trust a custodian. They don't have the asset to back the IOU notes. When you give the custodian your metal, they issue IOU notes to make money off of your asset. And the more IOU notes that they issue, the more dollars that they print, the more that they can't redeem the dollars that were supposed to be redeemable to silver. That bar that I showed was actually what money was supposed to be in the U.S. Gold assay bars, silver assay bars are actually people that came to the assay office with a gold certificate or with a silver certificate, and our old money used to say, pay to the bearer gold on demand. That's what it used to say. It used to say, literally, this is supposed to be a gold note that when I give you the gold note, you give me gold from your bank vault. It's that exact scenario. So I'm glad that you asked that, Bite Hunter, because that's what happened. Every time that we've trusted a custodian, they have stolen it, they've lost it, and there hasn't really been another option. That's what they do. They either steal it or they lose it. Every time. In the entire history of humankind, whenever you trust a custodian, they steal it or they lose it. In our case, they stole it, in my personal opinion. I mean, I guess that's not really a personal opinion, but better yet, we don't even know how much gold that they have. They haven't even audited our gold holdings. We don't even know how much gold is out. People talk about how they know how much gold is in each individual country. We have no idea. There is no memory to gold. There is no digital ledger to gold. We don't know how much gold is in each individual country worldwide. We don't know how much Russia has, how much China has, how much we have. We don't know. So, and that comes from trusting custodians. There's like just a huge lack of trust there. So what happens if gold becomes like is more and more recognized worldwide as the sound money? If I was a world leader that didn't like the dollar very much, I'd say, hey, we have this much gold. Send whatever auditor that you want to check out how much gold we have and to test it. This is how much gold our holdings have. How much do you have? That's what I would do. If I was a world leader other than the US, I would prove how much gold holdings we had and then force the other countries to prove how much gold they have. Because that's how you would really prove how much wealth is really there, you know? And that would be an interesting scenario because we don't know how much gold we have. We have no idea. And I think that's another thing that's not talked about enough. You can Google it and it says like something along the lines of how much each country has, but we have no clue. We have no clue what kinds of mining that they've done. We have no clue what kinds of bartering they've done with other countries other than the US. We have no idea how much gold is out there. For all we know, China and Russia have way more gold than us, but we have no idea. We could still have more gold than them. I don't know. We have no clue. It's insane. It really is insane. So to get back to that question before I rant and rave too much, the reason why that assay bar came to existence is because someone didn't trust the custodian anymore and said, hey, I want my silver bar. Here's your silver certificate. I want the silver bar. And I have actual proof of it by auctioning that bar on my website. But it's a really cool auction to look at if you guys want to check that out. A lot of really cool information in there. But it's a literal piece of history of what the gold standard used to be. But long story short, don't trust a custodian. Don't trust a custodian. Don't have your money in some fund. Put it in, if you want to be in precious metals, it's not about, and the thing that it's not shared enough in the industry, I don't think, because there's still that narrative out there that if you have 1,000 ounces of silver, you're a bajillionaire in the future. And that might be true. I don't know. But what I do know is if you own 1,000 ounces of silver and it's in your safe, you have custody of 1,000 ounces of silver. You have custody of your money. That's the difference. The big difference is when everybody goes and runs to a bank and they're insolvent, the people who actually have custody of the asset can then charge whatever they want for it. And that's when the premiums skyrocket and things change, because the people who own the physical, they actually get to enjoy that premium and they have the true custody of the asset. And we've seen that time and time again. So if someone owned, for example, if you owned SLV or PSLV, and at the beginning of the pandemic, when silver fell from, I believe it fell from like 18 down to 11 at one point, if you owned an ETF, you took that on the chin. It fell from 18. It fell like, whatever, 40% or whatever it was. It would show when you opened it up on your digital thing that holds your ETF. If you have it in your IRA or you have it in some broker, whatever it is, when you open that up, it's going to show you, oh, you're down 40%. But people who owned physical silver still could sell it for that 18 level because there was a huge $5, $6 premium on silver because there was none to be found at 11. The premium skyrocketed because of that. So there's a huge difference in when you own the physical versus some sort of ETF or something like that, because it stays the same regardless of some big drop. There's still going to be a premium that jumps up. And as more and more of these big bullion dealers keep telling me recently, and I'm sure other silver channels out there are talking about this, but I could tell you on like an actual level of talking with these wholesale dealers, they're running out. They're running out and supply is drying up right now. So I'm looking at it, I'm going, I think there will always be a supply, but I think that there's going to be more and more people holding on to it and asking for more premium. That's what I think will happen. So although silver could stay flat, but it's really going up for the people that have the physical because they're just going to charge more and more premiums because they're just not going to be willing to sell it for that low level anymore. It's going to be interesting. That's what I'm thinking is going to be happening soon. That's a good way to phrase it. Educated guess. I should start saying that more often. It's my educated guess, not financial advice or not educated. My uneducated guess. Keep in mind, I'm not educated. I'm not a college educated person. Just that's why maybe I'm a total fool. Who knows? Maybe I should have gone to college to learn about all this stuff. I'm sure that would have taught me all of this. Let me see. Rolf Steiner in the house says my gold shares are down 25%, got pounded. And he's saying yes. So it's true that if you have the mining companies or if you have the stock and not the real asset, you don't get to enjoy the premiums that detach from the overall market. You just get hit with the overall market. So right now, I mean, some people don't have an option. They have to get the ETF or they have to get the digital thing. And personally, I think that the only way to actually change the system in a meaningful way is if everybody takes custody of the asset. And I think that needs to be the narrative, is having physical custody of the asset. That's why I created an exchange, because now I can take assets in from the public, test it, and know that it's guaranteed pure, and then exchange it to someone who's a buyer. So now I have a situation where I could help people move in and out of precious metals because of owning the exchange. But at the end of the day, if you don't hold it, you don't own it. And go and ask, what's an interesting one is McAfee. You know, McAfee lost like a small fortune because he had his money, I believe, in Lehman Brothers. All the people that were in Lehman Brothers in 2009, they lost millions and millions of dollars because the bank itself went bankrupt. And a lot of people, they tend to forget that, like, hey, maybe they shouldn't have bailed out Bank of America and bailed out all these banks in 2009. And what would have happened if they didn't bail them out? If they didn't bail out the banks like they did in 2009, I bet right now people wouldn't be as comfortable leaving their money in the bank as they are. If they actually let a free market act and they said, hey, people of Bank of America, you ran a crap company, you went bankrupt, you went belly up, and you deserve to go belly up, and now all the people that had their money with you lost their money, and you're going belly up, and we're not going to use the people's money to bail you out, and all of you rich CEOs and everything like that, all you bankers, you just failed. You failed, and the free market has determined that you're a failure. If we did that, right now, people would be much, much more hesitant to leave their money in a bank. People over in Turkey or other countries right now, ask them how they feel about leaving their money in a bank. A lot of them are robbing the banks themselves to get their own money out. We have these luxuries in the U.S. that we don't realize this, but ask anybody that had their money in Lehman Brothers. Ask any of them who had their money in that bank. Hey, are you comfortable leaving your money in a bank? I bet you they're a little bit more squeamish. But they're a little bit more nervous to have their money in the bank because they've already lost it by trusting a bank during a recession. So I don't trust any custodian. And I think if the movement for silver is really going to work out, and this scares me to talk about, because it's like I've worked a long time building my YouTube channel to where it is now. So when you talk about things like this, it gets me a little bit nervous. But really, the only way to squeeze the banks is by taking your money out of the banks and owning the custody of the assets itself. Imagine if everybody walked to their bank teller and said, I want all of my money, all of it. Now, Jamie Dimon, every dollar in your bank, I want all of it. And there was a bank run where everybody asked for their money out, bought precious metals with it, and then no longer held dollars in the bank. What if that narrative started unfolding? Then you would see people actually starting to act right. How do you get a bank? And here's another aspect too. If the interest at these banks is nothing, why are people going to want to keep their money in a bank? Why do banks feel comfortable paying you no interest on your capital? Probably because you leave your capital with them regardless. They go, oh, hey, you know how we keep your 100 grand? We give you this cute little app right here. You can just pull up your money on this cute little app right here. You need some money? Just pull it up on the cute little app. You can beg us for your own money if you'd like. And we give you access to this cute little app, so we'll give you no interest. What do you mean you want interest? We give you a cute little app to look at the digital nothingness that we hold of yours. You don't need an interest rate. Look at the cute little Chase Bank app we give you. They wouldn't act like that if more people walked to the bank and said, give me all my money. I'm putting it in gold and silver right now. I don't trust you, Jamie Dimon. You go, whoa, wait. We'll give you 2%. We'll give you 2%. How about 2%? Is that okay? Nope, still want my money back. Okay, how about 4%? How about 4%? They would change, their narrative would change so fast. It would change overnight if more and more people realize that they need to take custody of their asset. And if they take custody of their money and they put it into a different asset, these banks will start acting right. So how do you fix this problem? Really, taking custody is the only solution, because when you buy an ETF, you're also giving that data away. These big banks can see how much people are buying into a silver ETF, and that gives them data, valuable data that they can then hedge against. They can short it. They can do different things in it. But if you take the actual physical metal and more people start hoarding the physical metal, then they have to act right. So if you want to squeeze, like do a short squeeze, do a bank run, I mean, that's how you do it. People take their money out of the bank, take custody of it, and then say, I'll put my money back in you. I will give you, this is what more people should say in this narrative. I want to make like t-shirts saying this or something, because it would be, but anyway, if people go to the bank and they say, I will let you hold my money if you pay me an interest rate that compensates for the inflation that you created yourself. How about that, Jamie Dimon? I will let you hold my money, Mr. Dimon, if you pay me an interest rate to compensate for the inflation that you created yourself. That's when I'll let you hold my money. Other than if you don't do that, if you do not want to give me an interest rate to compensate for the inflation that's been created by the central bank and the commercial banks, then I am not going to let you hold my money. Last time I checked, when I want a loan from you, especially if it's on a credit card, if it's a credit card, it's like 22% or something. But if I want a loan for you just for a house, I got to pay 7 point some odd percent or whatever it is now for a mortgage. I got to pay that. But if you hold my money, you give me nothing, doesn't seem like a good gig. Doesn't seem like a fair deal there. How about this? I take all of my money out. We all take our money out, and we'll give you our money back if you decide to pay us a fair interest rate. And even then, I'm still going to be a little hesitant. People got to become better negotiators in this world, I think, because we've been getting a bad hand. We have lost this negotiation real bad when it comes to money and who holds the money and who holds the power. We're terrible negotiators as citizens. We really are. Anyway, that's the rant. That's what I have to say about that. But sorry if I ramble a little bit. I plan to do these for about an hour, and I'm already at an hour and 20 minutes, so I had a little bit to ramble on. Going to probably call it an end on this live stream, but I'll take a couple more comments here. I think Bite Hunter, that was the only super chat. I don't like missing those. If I ever miss one of your super chats, let me know, but I think that there was only the one right there. But that's how I feel about it. Just to answer your question, I think that the only way to do it is to actually take custody of the asset, and I believe in owning the actual metal. Some old guy says new notes. When I say some old guy, that's his name on here. I didn't say it's a fun. Anyway, it's his username. The new notes with traceable strips. I mean, there's all kinds. The one thing I will say about currency itself, if they wanted us to have real money, if they wanted our money to be, if people to have money outside of a system, this is why I argue we're already in a CBDC right now. It's already a central bank digital currency right now, because if they wanted us to have custody of the money and be able to own physical notes, why'd they get rid of $1,000 bills? We used to have $10,000 bills, $1,000 bills, $500 bills. I've posted a bunch of them on my Instagram, actually. If you follow me on Instagram, at Rob Sultan on Instagram, if you scroll down a bit, I posted some $500 notes, some $1,000 notes that I've had in the past. And this used to be real U.S. currency. In the 30s, they had $1,000 bills. Why'd they get rid of the $1,000 bill? If they wanted you to have money outside of the system, why would they get rid of that? And give you these little, and now they're cute about it now. They even colored the notes like Monopoly notes. You know, you got an orange $10 bill, you got a red $5 bill, right? You got the light green 20 with the little bit of orangish in there or whatever. It's like they're literally, you got blue hundreds. It's like, I remember, when are they going to come out with the orange $500 bill? You know, like that. I remember that being in Monopoly. You felt powerful if you had the orange 500, you know? I feel like but the problem is they won't have the $500 bill because they don't want you to have the ability to have access to that kind of money outside of a bank. That's why they got rid of the $1,000 bill. That's why they got rid of the $500 bill. That's why they got rid of the $10,000 bill they had. They even had a $100,000 gold note. And these notes back in the past, a $10,000 note and a $100,000 note was redeemable to gold. You can Google it. $100,000 gold note. It's like a multi-million-dollar bill now to have one of those. But they used to be back to gold and silver. And that assay bar that I have on the website is proof of that. Somebody redeemed their silver cert for that. But anyway, they want your money to be in that system. So how do you combat that system? You take your money out of that system and you put it into something real, something tangible, something that you can hold yourself, and then you protect it. That's what the way should be. There really shouldn't be any other way. I mean, that's what I would be doing, and that's what I am doing. I don't believe in, I own none of my investments, or I should say, I own like .coms and code and things like that, but none of my, no, how should I phrase this? 90% of my money is in, I have custody. You know what I mean? Like it's key to have the custody of the assets itself. I don't believe in any letting somebody else hold your stuff. I don't believe in that. That's not what I'm about personally. Zilla is exactly correct. He says, you're not allowed to have that much that we don't know what you're doing with. Exactly. So you want to know a real scenario of this? Go to your bank. And if you have over 10 grand there, go to your bank and say, I want all my money in cash. See if they have it there. See if they'll hand it to you. You know, I've tried it. Usually they need about 2 weeks. If you want to have, like, if you go to them and say, I want 50 grand, Want 50 grand in cash. Why do you need 50 grand in cash? Can you tell us exactly? It's my money. I want it. Give me my money. Well, why do you need your 50 grand? That's kind of a lot, you know? Well, we need a few weeks to get that together. We don't hold that kind of money. You mean I let you hold my money and you don't even have it to give to me? You don't give me an interest rate. You don't even pay me interest to compensate for inflation. And B, you don't even have it? This is a bad deal. I don't like this deal at all. I tell my banker all the time, the bankers for Mineral Exchange, they know I don't like them. It's very obvious. I'm like, I don't like any of you actually. But I let you hold my money for the time being, you know, but anyway, Kenneth says, I love collecting numismatic coins. Sometimes it works out well. Yeah, I like numismatic coins that have a little bit more intrinsic value to them. So if you check out some of this stuff, like those fractional 120s from the Deke fractional 120s are super cool in my opinion. But this is like, what's crazy is this is old currency. So just like the assay bar was old currency. So I have one of these Rattler Saints, which usually these are undergraded. So people really like these Rattlers. But this is something I have on auction this week on Mineral Exchange, is one of these pieces. But what most people don't realize is that this was an American $20 bill. If you actually, hang on, let me move myself out of the way. But if you look at the actual piece itself, that was a $20 bill. United States of America, $20. You want to know what that's worth right now? Currently, it's on auction and it's at $16.75 with a 10% buyer's premium, so it's about $1,800 right now. But it used to be a $20 bill. That's what it used to be worth. That's how much money they printed. That's what your $20 bill is now worth, upwards of $2,000 plus. Most people, now it looks like it's a collectible item in a piece of plastic. That's what our money is. That's what money used to be. Money. That's what real custody, and that's what it was meant to be. And this is just in 1924. So about 100 years ago, money was a $20 bill. 100 years ago was roughly an ounce of gold, just under an ounce of gold. So what does that tell you? You know, and you go back. We also have one of these, which is an early 1800s one. This is a little bit more of a premium piece. But when he's talking about numismatic coins, this is another one of our $20 bills. In 1855, this was when we had the Liberty Double Eagle, and that's another one of these numismatic coins. Now they're called numismatic coins, and they're collectible in these graded holders here. Like I'm auctioning these off this week. These all end on Sunday, but these used to be $20 bills. That's a $20 bill. United States of America, $20, you know? So it's like the money used to be money itself, and then we trusted them to be the custodian. Now, when you trusted him to be the custodian, they gave you little certificates. They said, here's a gold cert. Here's a silver certificate. And they gave you these pieces of paper that was supposed to be redeemable in these. It was supposed to be redeemable in actual gold coins. And these were roughly an ounce of gold, just shy of an ounce of gold. And that was what our $20 bill in America really was. And that's why people trusted us to be the reserve currencies of the world. To all the people watching my channel, this is stuff I didn't even know about this when I was a waiter, when I was like 23, 24 years old. I'm 29 now. I mean, I learned all of this stuff in the last 5 years. I built my company over the last 5-6 years. And what's funny is when I was a waiter, I had no idea about any of this. I had no idea that the United States currency used to be gold and silver. I had no idea what a silver cert or a gold cert was, or the gold standard was, or any of this stuff. 6 something years ago. If you're watching the video, the reason I'm doing this is to actually show you that's what United States money used to be. It used to be that, and if you don't believe that your money has been devalued, well, that's what a $20 bill is, and it's currently on auction, and it's at $1,865 on auction, and it started at $1. All my auctions start with no reserve at $1. So that's where it currently is at $1,865 for what a $20 bill used to be. Isn't that ironic? Like, how ironic is it really to be auctioning an old $20 bill $4 and the dollars are now $1,865 that it's at? Talk about some irony. Auctioning a $20 bill for $2,000. It's really that crazy. And then I'll take that money, turn around, and I'll go buy inventory with it. It's like it's just hot potato money now. It's just that an old $20 bill used to be something of value. It used to be something of money. Now you get the money in the account and you play hot potato with it and you throw it at something else as fast as you can because you don't want to sit on it before it burns you at the 20% inflation rate. It's pretty crazy. It's pretty crazy. And so when you go back, this is what the actual money itself used to be. And so the $20 bill of the US $20 bill was the ounce of gold itself, or just shy of an ounce of gold. But when you go back, this is when someone took a silver cert. Someone took a silver cert that was worth 100 ounces plus of silver, and they held the silver cert and they went, I don't trust you. I want the silver. The money itself isn't silver. I want the silver bar. And somebody in the 1964 to 1966 or 1968 period, that 4-year period, went and redeemed their silver certs and got this from the assay office in San Francisco. This is actually quite a cool write-up here, talking about the history of all of this. But that's what money used to be. This actually wasn't issued by the government on its own. This was issued on demand. So if you look at a silver certificate, it says payable to silver on demand, redeemable to silver on demand. So somebody redeemed their silver cert and got a U.S. assay office marked bar from them because they said, I don't trust you. I don't think you actually own as much silver as you say you own. I don't trust you. I want my silver. And they had to shut down within 4 years. They had to shut down within 4 years. Only a handful of them have the actual hallmark on them. If you have this hallmark on something else that's not real, this is obviously a real authentic bar. But if you have this hallmark on one that isn't real, that's actually like counterfeiting. It's like a felony offense, counterfeiting of money, because that's still considered U.S. money. This $20 bill, it's actually an interesting loophole with the $20 coin. This is actually still considered a $20 bill, if you can believe it. You see up in the top right corner how it says $20? You could give that to a bank and they will give you a $20 bill for it. Obviously, you wouldn't do that because it's worth a lot more than that, but they have to legally still consider this a $20 bill, legally. So if you go on interesting enough, if you have over 10 grand, oh, this is one that's going to definitely shake up the algorithm right here. Should I say this? Why not? Why not? So if you have, say, 100 of these and you go on an airplane with it, you could literally just say that I have $2,000. Really, you have like, what is that? 100 of them would be like over, like almost like $250,000 or something like that, 200,000, $250,000. But you're not allowed to travel with more than 10,000. So if you have more than 10,000 in cash, you can get pulled over by TSA and they'll say, why do you have 10,000? Tell us why you have 10,000 in pieces of paper that are worthless. Why do you have that? You're not allowed to travel with more than 10,000 without having like a reason for it, right? But you can have 100 of these $20 pieces in your pocket, and it would be considered legally by the U.S. government to be $2,000. It wouldn't be considered to be 200K plus, which is what it is in gold. It's considered to be a $20 bill. It's an interesting loophole. You're allowed to travel with well over $10,000 if it is U.S. currency gold pieces. So, yeah. Should I have said that? I don't know. Should I let the public know about that? Maybe. Why not? I don't care. I'm letting people know. Sign up for my auction house. I'd appreciate it. Who knows how long I can be here for. But that's a pretty cool little loophole. So yeah, if you want to travel with over $10,000 in cash and you don't want to be bugged, get real $20 bills. It's really an ounce of gold. But talk about, like, also, I wonder how that would work for international. I think international, it still counts as $20 bills. So if you go on a plane internationally, you probably could carry 100 of those and have no questions asked. You'd be like, no, I got this $2,000. My grandpa gave it to me and it's $2,000. Or you could say something along those lines. But it's, kids will probably throw it at the tip as old useless stuff. You know what? What's interesting now, I think that a lot of the youth is actually a little bit more intelligent than they get credit for. They're being dealt a really bad hand. You know, like if we really think about it, if somebody's like 15 years old, they've been dealt a pretty rough hand. You know, like they're dealing with the like record inflation levels. They have leadership that is outright crazy. It's kind of sad. They've been told the sad part is like my generation. The generations prior to my generation, I'm 29 years old. The generations prior to mine were basically, they went to college and that was a good thing. and all their wealthy friends that went to college, it seemed to be a very good thing because they couldn't really network back then. Instagram didn't exist. This YouTube didn't exist. Nothing existed. People forget that YouTube came out, I believe it was 2006, 2007 when YouTube was dropped. The first iPhone came out in 2007. I remember when I was 15, 16 years old when the first iPhone came out, and I had that iPhone in my hand, and I'm like, oh yeah, college is for sure a scam. I have a supercomputer in my pocket. Why would I ever want to read a textbook? I remember thinking that. But the problem is my generation was basically lied to and said college is this great thing, go get in a bunch of debt. And so they got it's obvious to me, because if I'm this passionate about sound money, I'm this passionate that I build a business around sound money. I built Mineral Exchange. All of the things I talk about is about sound money and Austrian economics. I didn't know the term Austrian economics. I didn't know the term gold standard until I was around 24 years old, 23, 24 years old. What does that tell you about our education system? I'm a, I am a definite person that went to public school. I went to public school my whole life, went to high school, did all that stuff, got terrible grades because I was very bored, just would just skate my way through it. But at the end of the day, they don't teach this kind of stuff. So the youth gets kind of dealt a bad hand. They're getting taught useless information out of useless textbooks. And meanwhile, they have the best tools ever at their disposal. So they've been kind of lied to and indoctrinated by the people that call the shots, and it's sad to see, because most of my friends that went to college, I wouldn't want to hire them. I've been getting part-time help around here to help with shipping and help with logistics as the auction house has been growing. So I have a couple new employees, but at the same time, none of them are college educated. I don't want to hire somebody that's college educated. They think so much of themselves. Oh, I got 100 grand in debt. I deserve $250,000 a year because I have 100 grand in debt. You got to pay me. It's like, no, I'd rather have a hustler with no college education. But some of these kids, like, they just got dealt a really bad hand. It's kind of sad. That's why I blatantly go out. I tell family members this. I tell friends this. I tell people that, on my YouTube channel, I am not shy about saying college is a complete, utter scam. Drop out now. It's completely a scam. It's absolutely worthless. You can learn all of this information for free on your computer. You do not need to go to college, especially put yourself in debt to go to college. I think if you want to be an entrepreneur, you want to be anyone in business, people that own businesses, they just want a hustler. They want somebody that will work hard. At the end of the day, they don't care about your college degree. And if they did, you'd work for some like pretentious little, tech company or something like that. And you really don't want to work there, to be honest with you. Like, I wouldn't want to work at some, anyway. I think that most people don't want to deal with college kids, because at least it's from my experience. They want more money. They think they think the moon of themselves, and they're most of the time have no real value to provide, in my personal opinion. The value comes from, like, if a kid learns how to really use social media or how to really use the iPhone well, I mean, they're pretty valuable. Learning how to code a website or learning how to operate on social media. I would love right now, if this person's watching this video, shoot me a DM on Instagram. Shoot me a DM on at Rob Sultan on Instagram. Shoot me a DM saying I'm good at making clips. I need a person to do clips for me, to put reels up on Instagram, to do shorts on YouTube, to do shorts on that TikTok thing, to do all of that. I need somebody that's good at cutting clips on an iPhone. You don't need to be a college-educated individual. You need to be a hustler. If you want to work with me, shoot me a DM on Instagram saying I'm good at chopping up clips for short-form video format, making 90-second clips and putting it on all the different platforms. I can do that. If you want to work with me, shoot me a DM. I will pay you good money for that, literally. So there's me offering a way to have employment, and I have only one prerequisite. I'm going to say prerequisite. Oh, that's a good term, isn't it? I only have one prerequisite, that you are not college educated. I refuse to hire anybody that's college educated. It is my only prerequisite. I want no college educated individuals working at Mineral Exchange. So just know that if you buy something from my auction house, it is ran strictly with degenerate hustlers. Nobody else. I will not allow any college educated individual to work for Mineral Exchange. Is that am I not allowed to say that? Is that something I'm not allowed to say? But I'm the captain of the ship, and what I say goes. What I say goes. I'm the captain of this ship. Zero college educated individuals, and if you are college educated, you get paid less around here. And I'm actually, the funny thing is, I probably should say I'm kidding about that. I can't say something like that. But no, I really do have a bias towards people that are just hardworking. If you want somebody to hire you and you want somebody to pay you well, provide a lot of value. If somebody provides me $250,000 a year in value, I will pay them $250,000 a year. But they need to provide that value. Most people, they want the big check and they don't want to provide the value to get the big check, including our own government, including Powell. They want to provide value, but they don't provide any value. They want to print this money, but they don't provide any value to earn the money. The money can't be worth what it's worth because they provided no value to get it there. Like, it's really that simple. But I wouldn't take it that far, Rich. I wouldn't take it that far. I'd like clean records at least, but definitely not Ivy League educations. I'm not kidding. I'm not kidding at all, actually. I'm not kidding at all. But anyway, clean records. That would be okay. There's more prerequisites than one. There's 2 prerequisites. You got to not be, but it depends. It depends. If you have a good excuse, you could have a good excuse to be, to have a record, but definitely not looking for a person to come to me and go, look at my fancy golden ticket. Look at my fancy golden ticket. I am worth $20,000 a month. Look at this fancy golden ticket I have my picture in the top right or top left corner here, top left right corner, whatever. And look at how nice the font is. The font is beautiful on this resume. I went to this school here. I went to that school there. And I worked here. I worked at Chick-fil-A. And then I went from Chick-fil-A while I was in college. And I went from there and I worked at this tech company. And I deserve $20,000 a year. Look at this fancy resume. If I have to deal with talking to somebody like that again, it's going to ruin me. Gonna ruin me. Yeah, no film school individuals. But yeah, I've literally had it with those. If you have to build a resume, you do not provide any value. People that provide value don't need a resume. They just go, I provide a lot of value. I am great at chopping up clips and putting them on every single social media platform you're doing. Know what you could do to get a good job? Go to the owner of the business and say, you're doing this wrong. You're doing this wrong. If you did it this way, I think it would be more beneficial to your company. I'll work for free to prove to you that you're doing this wrong. But if I do work for free and I prove that you're doing this wrong, you have to compensate me this much money. As a business owner, I'd be like, okay, you're on. I'll pay you 10 grand if you prove me that's wrong. If I'm doing this wrong, you could do it better. I'll definitely pay you that. Prove it. That's the narrative that needs to be pitched to the youth, I think, right now, because they've been kind of lied to. And the narrative that needs to be pushed is, hey, provide value. If you provide value, you will get more money. You will find if you provide, and I would say that the most valuable trait to have right now is being good at navigating social media. And that doesn't cost any money. There is no social media 101 class in a college. If you want to really be valuable today to any business at all, be really good at learning the algorithms of Instagram, YouTube, TikTok, all these things. If you're really good at that, unlimited possibilities. I would love to have a person here doing that full time. Would love that. I'd pay somebody to do good money to do that. So I'm serious. DM me on Instagram, at Rob Sultan on Instagram. Shoot me a DM and I will give you a job if you are good at doing that. It's funny because like some people and I'm going to end the video on this. I said I was going to end the video like 40 minutes ago. So I intend to rant on this. So if you're watching this still, I apologize. But I plan to end the video here pretty soon. But the narrative that I see right now is that you can tell somebody the truth, but they won't want to hear the truth because they've been indoctrinated in a way. If you spend 4 years, did it take 4 years to teach the stuff that people teach them in college? Did it take 4 years, or did they just want to rack up debt over 4 years? Think about that. To all the college educated individuals that might be watching this video thinking, oh, Rob, he's always talking bad about college and all this. Do you really think if you really sat down and said, this is the amount of stuff I learned in college, did it really take 4 years to jam this information in my head? Did it really take 4 years, or did they want me to rack up debt year over year over year? Because when you look beyond the smoke and mirrors and you see past the smoke and mirrors that are put in front of you, you realize, wait a minute, That's a great way to rack up debt, make money off of me, and then make me kind of stuck in this system where I have to pay off this debt that accumulated over those 4 years. And meanwhile, I've just been taught how to memorize information. The people that really get their college degree have proven that they're good at doing chores. They have not proven they have an imagination. They have not proved that they have value. They have not proved anything with that college degree. What they have proven is that they are good at doing their chores. If you tell me to memorize information, I can memorize that information. And I will sit there and I will memorize it, and I will take that information in, and I will be tested with all of my peers on the same information pertaining to the same textbook that everybody else read in this room, and I'm somehow different. I'm different. You should hire me because I read the same textbook from 1984, studied that information, memorized it, and took a test with everybody else that studied the same information and knows the exact same information, nothing proprietary. All of those people, multiple classes, hundreds and hundreds of people taking the same class to the same. You get where I'm going here? Does that seem like a fair trade-off? And it took 4 years of doing that? Anyway. I digress. But it's also the time that you give up. And so I will actually end the live stream on this. What is money? People will go to college. People will work their entire life to get their hands on a dollar, but they won't study the dollar themselves. The dollar itself, rather, is what I mean. They won't study the actual money. They will work their entire life to accumulate that money, but they won't study what the money is itself. And what is money? Money is supposed to be stored time. You give me your time, I give you this stored time. And it's supposed to take labor to get that stored time. When somebody just prints money away, it didn't take any time to make that money. You want to know what took time to make? Is our old money. What we used to consider money, when I show you guys this $20 bill here, that is what took, someone had to mine that. Someone had to refine that, spend hours of time and to actually create it into that beautiful coin there, stamp it after they mined it, refined it. And that coin, it's not a $20 bill. It's a stored ounce of labor. There's stored time and stored labor in that coin right there. It was hard to find. It was hard to refine. It was hard to make it into that beautiful coin that you see before you. That's what money is. Money is something that you exchange your time and labor for. And so if you give up 4 years of your time to a college, it didn't just cost you money. It cost you that too, but it costs you your time, which is money. Money is stored time. And so the more time you give away, the more potential earning power that you gave away. And that's what I really like to preach on my channel is stored value is really, it's not these pieces of paper that we've been told. So I think that more people need to ask themselves, what is money? Why was that considered money by the founding fathers of this country? Why did we believe in having an ounce of gold was a $20 bill? Because back then they knew that it was hard to get. And still today, it's hard to get. And not enough people talk about that. Not enough people bring up what money really is. And too many people, they work around and they go, oh, I want to make 10 grand a month. I want to make 20 grand a month. Well, study the money first. Study the money first and go, okay, what am I working my life away for? What am I trading my time for? That's everything I want to talk about on the live stream. Someone said, will you in the future accept Bitcoin on mineral exchange? I think so. I'm working on something along those lines. If I do accept Bitcoin, I kind of want to figure out how to keep it on my balance sheet where I don't just instantaneously exchange it for dollars. Where one Bitcoin is one Bitcoin sort of thing. I want there to be a good amount of Bitcoin on the balance sheet. And I don't want to talk too much about what's on Mineral Exchange's balance sheet, but I'm okay with holding Bitcoin on my balance sheet. I'm not against that at all, especially in the future. But it's going to be interesting when we see more and more stuff being kind of bartered with and different things, different mediums being used. I could talk forever about how I view Bitcoin, but Bitcoin is the only one that I trust. One of my friends brought up Ethereum recently, a good friend of mine, and I told him, if you need a 2.0, 1.0 is never good enough. And Ethereum is one of those things where it's like, wait till 2.0 comes out, wait till 2.5, 3.0. It's like, no, then 1.0 wasn't good enough. I only believe in Bitcoin. It's the only one that I like. And still, I'm very skeptical of that. I have much more precious metals than I have Bitcoin. But to answer your question, no, I'm not opposed to that. G-Dub gave me a $20 super chat right before this chat ended. Means a lot. I really appreciate the super chats coming in at the end, guys. Thank you for that. That's really cool of you. G-Dub says, people learn a lot in college. The problem is most of it isn't practical. Very well said. Very well said. To be fair, I have a very, very extreme bias against college because I wasn't able to focus in college. I'd be the person in college feeling like looking out at the hillside because I was so bored. And I also, what I didn't appreciate is I learn at my pace. I learn at my personal pace, and my personal pace might be dramatically more, dramatically fast compared to somebody else if on something I'm passionate about. And it might be dramatically slow on something I'm not passionate about. So somebody that wants to learn, advanced, I don't know, trigonometry or calculus or something like that, I can learn it. I actually really like math, but I'm so bored and I'm not interested that I don't really want to learn it. And so somebody might outperform me in that category because I wasn't passionate about learning it. But if it comes to coding a website, I don't see any of the college kids that I went to college with owning an auction house because I'm very passionate about that. And so I taught myself how to code and taught myself how to build that website at a much faster rate than those individuals because that's something I'm passionate about. So in college, there's a lot of goldfish being taught how to run, and there's a lot of runners being taught how to swim. And that's something that I don't understand. And then they have to take a prerequisite. You literally, college systems, they will get a fish. They'll teach a goldfish. They'll say, hey, I know you're a goldfish, but I need you to do a prerequisite class on how to run. And the goldfish will look at the teacher and think they're crazy. Be like, look, I'm a goldfish. I swim. But no, we need you to take a prerequisite class, and a lot of them, so we can space this out for 4 years while you can accumulate debt. And we need you to do a prerequisite on how to run. But I'm a fish. Anyway, but I totally agree with what G-Dub just said. It isn't practical. It isn't practical. Rich Pedersen gave me a $10 super sticker. Really appreciate that. On one of my screens it says like what the is a sticker. So I appreciate that, Rich. Thank you. It means a lot. But Ben Bernanke has a PhD. Yeah, exactly. I bet you know who has a PhD? Jerome Powell. I'm sure he's got a PhD. He looks real college educated. He's extreme. And you know who else? Yellen. I bet Yellen is. I bet she is so college educated. I bet they are super duper college educated. Those two. Anyway, I just want to inspire some hustlers out there. If I was watching this stream and I was like 16 years old, 17 years old, I'd get off it when the stream ends here, because at some point I'm going to have to end it. Well, I was supposed to end it like an hour ago, but I would get off this stream, look up auction history on vintage silver bars and gold bars, and go back to treasure hunting. I miss my treasure hunting days. I miss going to coin shows and going to coin shops across the country and like finding the cool stuff and then flipping it for crazy money. The money's out there. If you're good at navigating on an iPhone and you know how to check sold listings, so if it's a vintage bar, you can check all the sold listings on my site. You go to eBay, check sold listings on anything really, and go what Gary Vee teaches in those garage sale flips. Love that. Love that. A lot of like the stuff that he's talking about is real. That's actually there's some stuff that I don't really agree with him, especially with the NFTs and stuff. He kind of took advantage of that. He got away with a lot on that one. He's a good guy. I like the guy, but anyway, what he's talked about with the garage sale situation, it's pretty real stuff. Talks about looking up the sold listings on things. You can make a fortune. And then another one is that I actually really like this guy. What's his name? Ryan Pineda. Sorry if I messed that up. I saw him on Graham Stephan, and he was talking about how he flipped couches. That's a great hustle, and that's a real hustle. I actually believe his figures too. He said he made like $8,000 a month flipping couches. I believe him. I genuinely believe him when he says that, because the numbers add up. If you buy, 5 couches and you flip them each for $100 more, I mean, the money's there. People are giving away nice couches for free. People are giving away nice furniture for free. Go to the Craigslist session and look up for free stuff. Go to Facebook Marketplace, look up free stuff. You can just drive there, pick it up, flip it. Like, that's what people should be teaching right now. We need more entrepreneurs in this country. We need more flippers, people that are actually moving money around. That's so much more valuable. And when you do that, when you flip couches, say if you buy a couch on Craigslist and you flip it on Craigslist or whatever you do to flip, say that person there is so much more valuable to me, because they're going to know how to search eBay for sold listings. They're going to know how to sell something. They're going to become entrepreneurial and know how to negotiate. They're going to know how to make the deal and close the deal. They're going to know how to take the money in and build a bank account. They're going to know how to do so many different things by just flipping couches. So there's way more to it than just, oh, I flipped a couch on Craigslist. What it comes down to is you are teaching yourself how to be an entrepreneur. Every single entrepreneur, the first thing I ever did as an entrepreneur is I used to ride my skateboard down to TJ Maxx. And this is how I knew I was an entrepreneur, is I would go on to TJ Maxx. I still remember the store, or Nordstrom's, and I'd go in there and I'd buy like all the name brand hats and I would sell it on eBay. This is back in like 2008, 2009. I'd go and I'd flip hats on eBay and I'd buy them for $10 at TJ Maxx and sell them for like $40 on eBay. And I found out the arbitrage there, and that a lot of these stores, there's arbitrage environments that they weren't doing their marketing on eBay. But anyway, I digress. Though that is valuable traits that people need to be picking up, is how to flip stuff. And you'd be surprised how much money people can make doing that. Tens of thousands of dollars a month doing that people can make. Anyway, that's the video. That's everything I wanted to talk about. Thank you so much for being here. Sorry if I ramble a lot. I tend to ramble. So appreciate you guys all spending your Friday night here. Have a great rest of your night. I will see you at the next YouTube video. I'm trying to get better about doing these Friday night live streams. Obviously really busy with everything I'm doing at Mineral Exchange. 63 auctions up this week on Mineral Exchange. 63 auctions. It's kind of a lot. The last week was 81 auctions. This week, 63. And I'm going to give a sneak hint to everybody in this live stream. Monday, I'm dropping the biggest auction I've ever done. So this auction is a pretty big one ending Sunday and a lot of really cool stuff. But on Monday, I'm going to be dropping over 100 items on Monday. And there's going to be the biggest auction I've ever done on mineralexchange.com. So if you want to know more about what I do for a business, or you want to support me, and also anybody that spends over $1,000, I'm sure some people in here that have spent over $1,000 on the auction site, I personally call you. So if you want to chat with me about business, about anything, you want to tell me, you're wrong about college, Rob. You keep talking bad about college. You don't understand. My college degree is very valuable. If you want to do that and you buy $1,000 worth of stuff, I will call you and you can tell me exactly why I'm wrong on a phone call. But everyone who spends over $1,000, I personally call you. Thank you all so much for being here. Have a great rest of your night. I will see you at the next one of these. I'm going to be dropping a lot of videos in between these live streams, in addition to doing these live streams every Friday. Plan to do these, like, I want to make it a consistent schedule of maybe 6 p.m. every Friday, 6 p.m. Pacific every single Friday. So 6 p.m. Pacific time, 9 p.m. Eastern time. Have a great rest of your night, everybody. See you at the next one.